Hello, everyone. Thank you so much for joining the webinar today. Okay, I see many people are joining. We have about a bit less than 20 people in the room now. Let's give everyone maybe a minute or so to settle down, and then we can get started. Okay, so let's slowly get started. Good morning, good afternoon, good evening, everyone. Thank you so much for joining Gojo's Impact Report webinar today. I'm Haruna from Gojo's Corporate Planning and PMI team. It's really great to have all of you here, especially those in Japan. I know it's dinner time, so thank you for making the time to attend this webinar. Thank you. This is today's agenda. I will be making a quick summary of this year's impact report to give you an overview of what we've been working on. And then after that, I will hand it over to each of the panelists to talk about the characteristic of each region. So Arya will talk about India, Hugues will talk about Africa, especially Madagascar, and also Shoira will talk about Tajikistan. After that, we will be highlighting Gojo's new client impact framework, which Arya developed using all of last year. So she will talk about this. And finally, we will be moving on to Q&A to take as many questions as possible. If you look at the likely bottom of your screen, you should be seeing a Q&A button. Where you click, you can actually send questions using that function. So please use that function to share any questions you may have, even during the webinar, so that we can start looking into it and take it up at the Q&A corner. Also, for those of you who are joining from countries where English is not your primary language, please try using the subtitling function. There should be a button next to the Q&A function, which would allow you to do subtitling and also do automatic translation by choosing the language. So please try experimenting that, and I hope it works for everyone. Okay, so let's get started. This is our great panelists of today. They will each make a quick self-introduction in their own respective sections. So I would not go into much detail, but I want to highlight that today we have two leaders from our group companies, Shoira from Arvand in Tajikistan and Hugues from Baobab Madagascar. So I'm really excited to hear their stories from the ground, as well as Arya. Again, she's been leading the impact framework discussion, and she's also based in India. So she will be talking about what she's seeing in the country. So I'm really excited about that as well. Okay. So, just as a recap, Gojo is a microfinance holdings company based in Tokyo, Japan. We have a vision to create a world where everyone can determine their future. And to do that, our mission is to extend financial inclusion across the globe. This is our business model. So basically what we do is we as Gojo, with 40 people at the headquarters, we raise funds mainly from Japan, which we use to inject capital into group companies in different countries. And we not just capital, but we also provide support to these group companies so that we can add value in terms of operational efficiency, innovation, fundraise, governance improvements, and of course social performance, impact measurement. So all of these support we provide to ensure that Gojo Group as a whole provides high quality financial services to our clients. So that is what we do as business. This year's highlight is all about, Gojo's global expansion. So this is the global map, which I think is the kind of key slide of today. Last year, at the end of the fiscal year, we had only 5 countries where we operate. Now, this time, we are happy to announce we have expanded into 14 countries, especially with expansion into Central Asia, namely Tajikistan and Georgia. And also, thanks to Baobab investment, we are now present in 7 countries in Africa. So yeah, we've expanded a lot in terms of global presence. With this, of course, our impact in numbers have also grown. Gojo Group plus our minority investments, together we currently serve 3.4 million clients globally, which is, I think, about 40% plus compared to 1 year before. Our lending clients are still the kind of the primary chunk of clients. Over 80% of our clients are loan clients. But because we have expanded into commercial banks this last year, we also have added a lot of savings clients. So currently, over 40% of our clients are savings clients. Our female clients and rural clients, the ratio is still quite high, female being 73% and rural being 67%. If you have attended this webinar last year, you may notice that this ratio has actually dropped because this is mainly due to the fact that we have expanded into these new areas, Central Asia and Africa, where the client profile is a bit different compared to South and Southeast Asia. But still, our primary focus is the female and rural clients. That stays the same. Also, in terms of another highlight, we want to talk about the B Corp certification, which we have obtained in January 2025. This was a very long and tedious process, taking us actually 4 years to fully complete this. Because we have so many group companies, it was a lot of work. But it was a great journey. We had a lot of interesting findings, and after a lot of work, we are finally B Corp certified. So I think it shows that Gojo is fully committed to social and environmental performance and making sure that we create positive impact through our business activities. My slides end here, but I also want to touch upon, if you read the impact report, which I think, Stella, you will be posting in the chat, we also talk about our human capital strategy and also our initiatives to ensure that our employees, our staff are happy across the group. And we also talk about environmental initiatives, which we admit it is actually still, there's a lot more to do for us to progress in terms of environment. But we're making progress step by step. And I think, Shoira, today in your presentation, you would probably touch a bit upon Arvand's initiatives, which we also highlighted in the impact report. We also cover the usual SEPM content, SPI audits, which we regularly do as a practice. And also, I want to highlight the interviews that we have from many different people across the group, including Shoira's interview. I think it's actually one of my favorite content of this year's impact report. So I'm really happy to have Shoira talk in her own words about the journey that she has gone through over the last 20 years. So yeah, I think that's kind of it for the summary of this year's impact report. Now, Arya, I would like to hand it over to you to talk a bit about the India situation. Over to you, Arya.
Great. Thanks, Haruna. And it's very nice to be sharing the stage with all of you today and joining the webinar today. Just a quick introduction. My name is Arya. I'm from Kerala, but I live in Delhi in India. And I've been with Gojo for a little over 2 years now, and I work as the impact lead in the impact team. And today I'll be talking a bit about India. I've been given 5 minutes. I'll try to see what I can pack into it. And I'll also be sharing our new impact framework later towards the end of the session. So coming to India, I mean, there's a lot to talk about. It's a colorful, big country. And as I was preparing the slides, trying to focus on microfinance in India, I was thinking of, an apt picture that I can show all of you to represent a typical MFI client in India. And I thought of this particular lady that I'd met in Uttar Pradesh, which is in the northern part of India. And the reason why I think she represents a typical borrower in India is for two main reasons. One is, of course, demographics. Microfinance began in India by serving rural women through self-help groups. And even today, many MFIs continue to serve such rural women as their target clients, particularly through a joint liability group model, which I'll talk a bit more about. But the second also has to do with her demeanor or personality. And I think she strikes me as a very cool, casual, yet confident person. And that's a look that I've often seen in my field visits. And one reason I think, that exists behind this confidence is their very long experience with MFIs. So the India MFI market is very mature. It's highly regulated, it's very competitive. And any village that you enter, there's at least 15 to 20 MFIs or small finance banks in and around serving clients like these, right? And these MFIs have been around for several years. And in fact, some of the clients that I've met have been, been MFI loan users for like over 15 years, which is a very, very long time. And I think that experience and comfort with formal loans is often visible as this confidence in their face. The other reason why I think she's so composed is also her resilience. Now, if you know, in the last year, India had a significant heat wave. Many people whose livelihood depended on farming and agriculture, they were affected significantly. They had loans mounting. On average, it was normal for, these clients to have at least 5 to 6 loans. And as their sources of income kind of wavered due to the heat wave and so on, they started struggling to repay and stress began growing in the sector. And as a result of this, many self-regulatory organizations have brought in rules to, reduce the number of loans that a client can have up to 3. And because of this, we now get to see clients having fewer formal loans, although they may still have a number of different informal loans, right? Now, I'm saying all of this to tell you about the challenges that these people are going through on a daily basis, especially in the last year or so. And despite all of this, they seem to be extraordinarily resilient and calm sometimes. And if you look at her picture closely, she's sucking on a kulfi, which is an Indian ice cream. And she's so relaxed during like a sunny afternoon there when I met her. And I think it kind of has to do with her mindset and belief that these challenges will keep happening and we will get through them one day at a time, or maybe even one kulfi at a time, right? So that's a typical Indian MFI client that I see today. And now I want to talk a bit about like a unique MFI model in India, which is the joint liability group model. Haruna, if you could change the slides, please. So this model is particularly prominent in two of our partners in India, Satya and Prayas, and also Sejaya in Sri Lanka. And if you look at the picture, you'll see I'm standing with 7 clients from Prayas. This is a picture I took in Rajasthan. Now, to talk a bit about the model, these groups are often, started when a loan officer typically visits a village, does some awareness about it, and asks, like if anybody is interested in creating such a group. And once there's like a minimum of 3 ladies who want a loan and are willing to join the same group, they agree to start a group. The loan officer fills their loan applications, he does all the credit assessments, and once all their loans are approved, they each visit the branch for disbursement. Now in India, all of this process has been happening digitally in the last couple of years, and the loan amount kind of gets dispersed directly into their bank account, which they then withdraw for use. And most of them take these loans for agriculture to cover their farming costs, like for seeds and fertilizers. Others use it to buy cattle or a sewing machine or to stock up inventory in their small shop. And once the loan is dispersed, this group, obviously they start using it, and then they meet every month along with the loan officer at their group leader's house where they each repay. Repayments again have started happening digitally, but I'd say around 30% of women, repay digitally now. Like most of them still rely on cash significantly. And the concept of this joint liability is that if one person is struggling to repay, then the others will come together as a group to support her to repay this particular missed installment. And then she just promises to repay her group, on a personal note. And to be honest, while this concept used to work really well in the past, I think its original shine has started kind of dwindling a bit. For instance, in the recent heat wave, when I mentioned, a lot of the people were affected, which means many other group members are also struggling with their incomes, struggling to repay several loans. So it's really challenging for them to support one member who's struggling. And often I've seen that they're willing to come together to support for one or two repayments, but beyond that, it's really difficult for even them to support the group. But having said that, like just zoning out from what I've seen in my recent visits to India, like I feel like the situation has not improved very much. If last year we had heat waves, this year we have excessive rains, monsoons that have started, way before it was expected. And while some of them are used to this kind of unpredictability, like some of their farming, rituals have been affected because of this, right? And although the sector has not been particularly improving in the short run because of all these tight lending rules that have come in recently, like what we're all hoping is that this will promote more responsible lending, safeguard clients better, and that in the long run, it will stabilize the market for us. So with that, I come to an end and I pass it to Hugues to share, to take us to Africa and talk a bit more about Baobab in Madagascar.
Thank you very much, Arya. I would like to come and visit what you guys doing in India. Sounds very interesting. My name is Hugues Bonshe. I'm actually the CEO of Baobab Bank Madagascar, a subsidiary of Baobab Group. I'm going to introduce you very quickly. So Baobab started its operation in 2005. I think the investors gathered and wanted to unlock opportunities that existed in the market in Africa with the main idea of empowering small businesses across the region and availing to these small businesses effective and inclusive financial services. As we know back then, these financial services were excluded for most of them. The potential was huge. As we all know, Africa is a rural, mostly rural economy. So there was a need for small businesses to get access to funding, have access to knowledge, to see how they can improve not only their businesses, but also the livelihood and the environment where they were living. So the investor come with there's a vision of not only being a leading financial services in Africa, also include a component of empowerment and how we can buy small businesses to create more impact in our communities. So leveraging on this vision and mission, if we move to the next slide, we see Baobab moving from different places from its inception, where operation started in Madagascar. And today the group covers 7 countries, which include Nigeria, Senegal, Mali, Burkina Faso, Ivory Coast, Democratic Republic of Congo, and Madagascar. In all these regions, all these countries, we have the same feature. The potential is usually enormous, but then there is a lack of many point or many access to what can be used to transform these countries and these villages or communities. So Baobab, with its business model, is actually positioning itself as a tool for a very deep and transformative social and economic movement that will create a huge impact in developing people's life in these places. So basically, this is what Baobab does in this region. What Baobab does in the market is actually empowering small businesses and all the surroundings and partners that work with all these companies. If we go a bit deeper in this presentation, we move to the next slide. I've already covered all these countries. We go to the next slide. What we see as Baobab develop is that by being this socioeconomic movement for the transformation of our communities. The group has done a lot in availing effective financial services to small business in Africa, in terms of lending activities, but also in terms of creating a culture of savings, a culture of deposit mobilization to ease the funding of small businesses in Africa, leveraging more on digital infrastructure to transform the financial institution to a place where people used to go, to something that they do from the ease of the home, the ease of the office, ease of where they are. So the whole idea is to remove barriers to make sure that they can actually access financial services regardless the conditions or where they actually are living. So these are the key we're doing when we're talking about financial services. But what does it really mean when it comes to impact? As I say, we are there to transform life. We are there to transform and impact livelihoods in the market where we're living. If we move to the next slide, I mentioned, when you check this region and you go in, you see the population is very young. The youth usually go above 50% of the population of the country. The economy is more in agriculture, more rural. So there is a need of having a structure model, not only availing funding, but also making sure you provide knowledge, you provide training, so that you can actually equip all the small businesses to continue and create more value. This is what we do on a daily basis in our branches, with our loan officers, with our middle managers, is actually making sure we avail financial services, but in the same time, we train these customers to get the knowledge and also to continue transforming the environment where they live and the communities in which they are living or processing the transaction. If we check on this impact, what we have done also within Baobab Group is actually leveraging on the social goals that exist today, be it the social goals that has been defined by the United Nations, we all know them, the social goals of development, but also working with some certifying companies, being series or SPR framework that has been developed, but also the microfinance agency, where we bring together our business model with our values and principles, but also aligning them with the social development goals to make sure that we are not only availing funding, but actually creating value for the communities that we're serving, but also impacting and empowering people we are working with. And when it comes to this empowerment, what we have done in Baobab so far is actually tremendous. When we go to the slide that talk about this impact and these social development goals, we will see that 43% of our customers, of our employees and middle managers are women. 49% of our customers are women. If we check today, from what we are doing in terms of product and services, the minimum amount that we actually, if you go to the next slide, Haruna, you can move to the next one. Yeah. If we go, we check in this impact, as I was saying, 42% of our employees are women, 42% of managers are women, 49% are actually of our customers are women, and 31% of them are already using our digital platform in order to access easily the services. As I say, we are actually transforming the environment. When it comes to poverty, what we're doing is that we have disbursed more than 1 billion loans last year for us to avail to them what is needed. And also on something that is very key within Baobab is actually education. We are not training only our staff, but making sure that every single loan that we are disbursing to these customers is backed with a training, so that most of them will understand what are the dynamics that exist within their activities, what are the balance sheet, what are the how the P&L look like, what are the cash flow model that we are developing, All this is actually included in what we within Baobab are doing to transform the community where we're living. So in short, in 10 minutes, this is how I will present Baobab, saying that we are not only a leading microfinance group within Africa, but actually a movement of socio-economic transformation that is happening here in the continent. Thank you.
Okay, thank you so much, Hugh. It's a wonderful presentation. I'm sure there will be more questions, so you can cover all of the topics that you have covered in the slides that you did not talk about in the Q&A. All right, so Shoira, over to you to talk about Tajikistan. Are you ready to go?
Yeah.
Okay.
Hi, from a big continent of Africa to a small country in Central Asia, Tajikistan. My name is Shoira Sodiqova. I'm CEO of Bank Arvand. And we started back in 2002 as a small project, microfinance project. We were only 12 people. And the goal of the project was to create access to finance to those who didn't have that access. And obviously, these are the micro entrepreneurs, people with no credit history, very small businesses with no experience working with banks. And they actually were not interesting for banks due to that fact and didn't have collateral, obviously. So if you go to the next slide. So this was our goal when we were created back in 2002. But since then, we've gone through many transformations. And the first transformation was that we received our deposit taking license because we wanted to expand the type of the services we provide. And throughout that transformation, we continue to implement our main mission and our social goals. In 2014, we received the funding, equity funding from European financial institutions, which made us grow even more. And then at that time, we would double our portfolio each year. In 2015, we received our SMART certification, which is a client protection certificate. We were one of the first in the country to receive it. And in 2019, we did the first merger of two financial institutions in Tajikistan, by which we received our license. So we are 5 years a bank now, for over 5 years now. And again, this is another transformation which changed the spectrum of our products. Now we do a lot more and at the bigger scales, but did not change our mission and the target group. We continue to work with the same target group and with the same mission and goals. In 2021, we started our digital transformation, and since then we implement about 10 projects per year on digitalization. And this is related to clients and internal processes of the banks. We were the first financial institution in the region to adopt ESG strategy in 2023, and since then we work under that strategy. And a happy and big milestone is that Gojo became our shareholder, one of our shareholders at the end of 2024, and we're about to close the deal for majority stake. Next slide, please. So Tajikistan is a country of 10 million population. Although 20 years ago, the situation and landscape of financial services was completely different, still today we have the same challenges in the market and the same issues for the clients who would like to have their loans and other financial services. Only little over 10% of GDP is a total loan portfolio for the banking sector, which means there's huge potential to increase the loan portfolio even more. We are largely cash-based economy. That's why digitalization and going non-cash is one of the priorities for our country. Next slide, please. I think what in our particular case in Tajikistan, microfinance was the leading and game changer for the banking sector, because we had the situation where banks had to learn from us actually how to work with micro and small clients, and they largely did the downscaling to be compatible with microfinance market. Microfinance market in Tajikistan with the big leading microfinance organizations had similar to our history. They did sustainability and social finance from the day one, which created a trust of clients to us and our trust to the clients, and was a success at the end. Like I mentioned, we transformed into a bank. The same was done by Humo, which I congratulate again about. Next slide, please. Of course, the results in figures for Arvand, next slide, today is that we are largely still in the rural areas. Over 77% of our clients are in rural areas. Over 43% of our clients are women. Most of our portfolio is in microfinance. It's 84%, and implementing ESG strategy. Obviously, we are the leading institution doing green finance, and about 10% of our portfolio is in green finance. We also have a green deposit portfolio, which are online deposits. The social responsibility related loans I already mentioned, and besides social responsibility towards clients, of course, the social responsibility towards employees is a priority for Bank Arvand. So we have a very wide well-being program for our clients, for our employees, sorry. So today we are a bank of 950 employees, covering throughout the whole country by 11 branches and 64 sub-branches. Next, please. I would like to show you one example on community support, which is our work with one public charity organization, which works with kids with Down syndrome. With only $10,000 per month, we support this public organization for 2 years now. And thanks to that, 25 kids regularly and even more from now and then participate in all kinds of events, and they have a special center to visit where they receive the help. Next slide, please. We do a lot of financial education by trainings and financial education festivals. We cover throughout the country with other banks and financial institutions, and with the support of National Bank of Tajikistan. Next slide. I would like to give you an example of one of our clients. We have many, of course, but Muyasara, the woman with the cake, she actually started with baking cake from home with only 2 cakes 10 years ago. But by the time she opened her first cafe, she had about $15,000 in her savings, and we helped her with another $10,000. And this was a startup business, a quite risky one, but now she's a successful women entrepreneur. And these women, in addition to being clients of Arvand and working with us for several years, we help them to participate in the competition and become successful women entrepreneurs, because I believe that in addition to what they do and how successful they are, they also could be a very good role model to other women entrepreneurs to take the risk and participate in the business and become successful. Next slide. In addition to saying how good we are, we have to confirm it by our other external parties. And so one example, like I'm proudly want to share, is how we become a winner of 60 decibels in 2024, which is Microfinance Index. 45 countries and 128 financial service providers participate in that index. And what valuable is that the index and ranking is done based on replies of our countries. So 36,000 clients have actually participated to give their feedback about their financial service provider. And based on that, for Asian region, we become #1. And what's important here is, again, the client protection and impact of the loan to their lives. And as you see, there are several components based on which is evaluated financial institution, and their services are evaluated, and whether they had to reduce their meals because of the loan, whether they had the difficulties after they received the loan in their repayments, whether they did understand the parts of the loan agreement. All this is evaluated, and as a result, the financial service provider is assessed. So I could be talking a lot more. I did my best for 10 minutes. Hope to be answering the question and telling more about Arvand. Thank you.
Thank you so much. You have done very well in terms of timekeeping. Thank you for the cooperation. We are right on time. Thank you, everyone. I will hand it over now to Arya to talk about one of our key highlights of this year's impact report, which is the revision to our client impact framework. So over to you, Arya.
Great. Thanks, Haruna. I think we can go to the next slide. So, I mean, as Haruna has been building up the hype, you all know that this has been a big project for all of Gojo, and especially for our team last year, where we revised this. After several hours of debates and confusions and challenging questions, I think we've finally arrived at a framework that we're sharing with all of you. But before I jump into the framework, just a bit of background. So what you see on the screen is Gojo's client-centric framework, which was developed back in 2020. And it has served largely as a theoretical foundation for what impact really means to us. And back then, we had, the team had already identified about 40 indicators, but we were able to collect data for only about 4 of them through our internal client satisfaction surveys, which we were doing annually. But in the last 5 years, all our partners have grown significantly in capacity and experience. We've been collecting, data of various kinds, be it client satisfaction surveys, client exit surveys. Our complaints reporting has sort of improved, and of course, we've been tracking MIS data as well. So last year was just perfect for us to build on top of all of this and develop this new impact framework, as well as a standalone impact survey to measure data, especially on outcomes that our clients are experiencing. Next slide, please. So in terms of the framework, it has, this new framework, it has 3 pillars. There's outreach, quality, and outcomes. And as Haruna mentioned at the start of the webinar, right, like lending clients, especially retail lending clients, make up the bulk of our portfolio. So this framework has been designed largely with them in mind. Now, the path to creating impact for any client sort of begins with access. It's about them having access to a formal loan to fulfill a business need. So that's what outreach is about for us. But at the same time, it's not just enough for people to have access to a loan, but for them to be able to use it well and to see changes in their business or their life, the product itself must be designed well. It must be of high quality. And as a result of using such a high quality product, they may experience outcomes in their life, such as business growth, which then leads to financial stability and household well-being as well. And collectively, all of this leads to impact, where the client feels confident to manage her financial life, and she feels like she can determine her own future. So this is a very ideal or theoretical model based on which we've developed the framework. And now I'd like to talk a bit about the various indicators that we have shortlisted. Next slide. So when we look at outreach indicators, we look at both the breadth of outreach, which is the total outreach, and also depth of outreach, which is outreach to particularly underserved and vulnerable clients. And most of this, data is from the MIS, and it is already being reported in our impact reports. You would have seen some of these indicators already in this webinar. But one indicator I want to draw your attention to, for example, is from the new impact survey that we will conduct, where we're asking for clients who say, we're asking clients whether they believe that they could have financed their business without this particular loan from the FSP or not, which is really hearing directly from the clients on the difference that we've made in terms of access to finance. Moving to quality. Now, when designing these, we paid extra care to choose indicators, that sort of build on top of the indicators we were already tracking, basically through the client satisfaction surveys, exit surveys, complaints reports, and so on. And so around 80% of the indicators that you see here were already being measured, and only a couple of them had to be added for the sake of completeness. And just as a theoretical model behind this, we thought of what features made up a high quality financial product, and we defined these 5 categories that you see, which is affordability, convenience, flexibility, safety, and reliability. And we mapped indicators accordingly, to each of these features. Now, I can't go into all of them due to lack of time, but safety and reliability here, for instance, right, is around client protection principles. It's around transparency, fair and respectful treatment, timely complaints resolution, etc. And at the end, all of these features, once met, the hypothesis is that it also makes the client satisfied. And so we have a few indicators to measure client satisfaction on top of this. Now, lastly, moving to outcomes indicators. This has been the bulk of the work for the team last year, and these 8 indicators that you see have all been, freshly designed, inspired, from the Financial Health Survey Manual by IPA, and also the 60 decibel survey that Shoira was just showing you. And the idea is that we will track this using an annual impact survey for and the sample size would be, about 300 to 400 clients in cycle 2 and above. Now, these indicators have been designed to know the short-term changes that clients experience in their business as well as their personal life. So for instance, in this, if you see business growth, that particular section is about their business, but the other 2 areas on financial stability and household well-being touch upon their personal life. Similarly, these indicators have been designed not just to know the positive changes in their life, like income or savings increase, but also their challenges and burdens, such as repayment burden and resilience during emergencies. Finally, I feel like any discussion on outcomes or impact can't be complete without talking about attribution. And after a big debate, we kind of agreed that, the closest we can get to attribution in the short run, at least, is by asking clients what they think it was the role of the FSP in creating these particular outcomes in their life. So if you notice the second indicator, which is percentage clients saying business growth could not have been achieved without the company's loan, I mean, these indicators are meant to get a sense of attribution, even if it is not definitive. As of today, we have already started implementing the impact survey with our partners. And I think by the end of the year, almost all of them will be done with it. And we are continuing to learn and improve our indicators and our survey design, in this iterative process. Next year, when we do the webinar, I'm sure we'll have a lot more insights to share from our practical experience of implementing data collection for all these impact indicators on the ground. And I'm really excited for that journey as well. Thank you, Haruna. Over to you.
Okay, thank you so much. There's so much we want to talk about, but now it's time for Q&A. Thank you for those who have already shared questions. I think we will start with them, but while you listen to this Q&A, if you have more questions, please feel free to keep adding. We have a bit more than 15 minutes till the end of the webinar, so let's take as many questions as possible to make it more interesting. Okay, so starting with the first one, which is from an anonymous attendee. Thank you. How does the Holdco's B Corp certification complement the group's client protection certifications? How do the B Corp's customer assessment differ with the client protection certification assessment? Okay, so let me take this question. So B Corp, I think there's a lot of overlap in terms of B Corp and the client protection certification. However, the big difference is that B Corp is much, much more generic and the coverage is wide. And it's also good to note that B Corp is not specifically designed for certain industries. There is some customization as per industry, and we look into this kind of finance space, but as you might know, client protection certification is fully designed for FSPs, microfinance institutions, so it's much more detailed and quite concrete. Whereas B Corp coverage is wide, questions could be a bit more generic, but yeah, that's I think the key difference. In terms of a principle, because Gojo as holdco, we do not operate financial services. We decided to take on this B Corp to ensure that Gojo as holdco and as a group, we follow ethical, socially responsible standards. However, for group companies which operate which operate financial services, we encourage them to acquire this, to be certified on client protection certification. And on top of that, if they have the bandwidth and the will to kind of take up B Corp additionally, I think, that is also good to take because again, the coverage is a bit wider. So that's kind of the key difference. I hope this answers your question. Thank you so much. Moving on to the next question, which is, I think, Arya, you can take this up coming from India. How are your Indian group companies digitizing the JLG model? Oh, interesting question. Okay, Arya, over to you.
Great, thanks for the question. Well, I don't know if it's appropriate to say they're digitizing the JLG model because I think kind of is like a phygital model, right? Like the group still exists. The women still gather in the house of a group leader. The loan officer still goes there. There is some element of manual collection happening. So I think what's more fair to say is that operations are getting digitized to kind of make the entire sort of process faster, more efficient, paperless, and so on, right? So a couple of ways. One is, let me talk about Prayas because I just came back from a field visit to Prayas. So they have developed a lot of in-house apps, be it for loan application, be it for credit assessments, even for collections, that the loan officers use. So at all stages, it's almost paperless, entirely paperless, right? And the client does not really have to visit the branch until the day of disbursement. And even when they do come for disbursement, disbursement also happens very digitally. So in India, the national ID that we refer to is Aadhaar. And, based on the Aadhaar, like there's a fingerprint that's linked to it. So when the clients come, they just use their fingerprint and their ID is verified. And after all the checks that happen at the back end, etc., the approval kind of happens and the money directly hits their bank account. So there is no dealings in cash as well. When it comes to collections, like I said, there is a QR code which is printed in loan cards for all of the women in a group, and they can either choose to repay using one of these fintech apps that we have, right? Or they can repay in cash as well. And like I said, the adoption is still in its early stages, I would say. They're also, for example, developing client apps where the client can see the loan contract, check their loan schedule, like what's the upcoming, repayment amount and date, etc. And they're also working on ways to kind of add a loan application process directly into the app and so on. That's in the pipeline for them. When it comes to complaints as well, I mean, I think India is really moving towards call centers and, like just telephonic conversations more than old ways of having a complaint box and a complaint book. So often I would see the call volumes coming to the toll-free numbers, especially for complaints, is going really high compared to manual ways of raising complaints. So yeah, these are just some ways in which I've been noticing that they're digitizing their operations. However, like the idea of a group coming together and that sense of solidarity and community still exists, I guess.
Thank you so much, Arya. I think that was a very full explanation. I don't have much to add, but having gone to India from Japan, I was actually quite surprised at the level of digitization in general for India. So what Arya explained, which is a combination of digital and physical, is exactly what I saw in the India operations. So thank you, Arya, for taking the question. Let's move on to the next one. Thank you, Nato, for the question. Hi, greetings from Georgia. Could you please elaborate more on green deposit? I think this one is for you, Shoira. Details of the product and how it works. Yeah.
Yep. Thank you. Basically, it's a deposit that is opened through the mobile application, fully online, fully digital. So it's being paperless allows us to say that it has a good impact on the environment. But what's important is that the clients know that the funds that they put in as a deposit will be used for the green portfolio. So that's the main condition of that green deposit, that we collect that funds to use for our green portfolio in order not to be so reliant on the green funding that we receive for our green finance. That's the main concept, basically, of the deposit. Thank you.
Thank you so much. It's actually quite interesting. Arvand is developing many interesting green products. So I think one of the things I want to do in near future is we learn from them and try to kind of implement it across the group. And Shoira, you can be the coach when this happens. Okay, let's move on to the next question. Thank you. Yes, quite insightful to hear about the impact framework of Gojo. Can I ask you whether Gojo refers to globally accepted impact framework, like operating principles for impact management? Actually, I don't know this one. Arya, can you take up this question?
Yeah, sure. And I think there are a bunch of related questions to the framework, so I'm happy to answer them. So yeah, I mean, the short answer is that I think the essence of all these principles is the same: to be a responsible investor, to have an impact thesis, to make sure that the investment you're making, kind of they're not just impact washing, but they're actually doing something of significance, and then to also have measures in place to measure impact or outcomes, right? And also exit responsibly in the end. So in principle, I'm sure we are practicing these principles that we're talking about, but at the same time, to answer your question very specifically, no, we have not based our framework based on any particular framework that's out there. I think the discussion for us was around, we already had certain ways of measuring data in place. On top of that, keeping in mind the capability that our group companies have to measure data, and to also then find what are the most meaningful indicators we want to measure, how practically and more feasibly can we measure it, and how realistically can we actually implement it in the ground, and how will we use that data for analysis and so on, right? So I think those were the questions that really led us into, in the whole journey of developing this impact framework. There are two other questions which are kind of related to the framework, so let me go ahead and take it. Thanks, Nato, for this particular question. So your question is, what is the vision to collect the information, using the impact survey, right? So let me talk a bit about how we went about this. So once we designed the framework, like the most realistic way for us to do it, like collect data, was to do telephonic interviews or surveys with our clients. And the realistic sample size was 300 to 400 clients, and this would be an annual survey, right? And we had designed a survey questionnaire and we tested it in person. We refined it, then we did another telephonic pilot, and then we again refined it, and we've arrived at a set of questions that we would like to use, which kind of maps to these indicators that you had seen in the framework. The idea is that, like, what's happening right now is that our partners are implementing it and we're getting feedback from them. Especially challenges are coming when they're translating it in their local language and asking the question. Sometimes what we write in English is not exactly the same in translation. So we're having to make some refinements and edits to the survey design. But to answer your question very simply, I think the idea is that we will ask the clients directly over a telephonic conversation the calls usually last about 15 minutes. And then we kind of analyze the data from that to, get responses against those indicators. There's another question from Jan. Hi, Jan. Are independent parties like 60 Decibels contracted to run an annual impact survey, or are the partners collecting the data themselves? Great question again. So we have been also commissioning 60 Decibels, in the past, but the idea now is that now that we have our own in-house survey, we will try and use our in-house survey on an annual basis, and then sort of use 60 Decibels maybe every 2 to 3 years, just to index ourselves externally and triangulate the results as much as possible. So that's the plan for now. Thank you.
Okay, thank you so much. We very efficiently and quickly covered all the questions. Actually, touching up on 60 decibels, since Shoira, you mentioned in your slides that you have done this and you've been kind of featured in the survey. What was the experience like? Do you see any, what was positive about it? Any challenges?
Yes. Basically, it's a confirmation of the fact that you really do your work right, follow the client's protection principles, etc. The process itself is such that the 60 Decibels hires a local consulting or advisory or some research company who speak the local language. We usually don't know who is hired, so it's kind of independence is there. We give them a big list of clients with the phone numbers, and this local research company calls our clients and talk to them without our participation. So we don't know which client exactly will be contacted and what questions will be asked, etc. And then, and as a result, we receive the report at the end. And it's good that you kind of, if you participate a couple of times, you see the dynamics. And already after the first report, we knew in what direction we should be working more. Like the first report had indication that not all the loan agreement details are explained well. So we had to work on that direction, yeah. And at the next report, we already see the difference and improvement there. The challenge is that sometimes client gets scared because someone is calling them and asking about the loans and repayment, etc. And they start calling us saying, someone is asking me a lot of questions about my money. So that's the only challenge that, clients kind of hesitant to openly talk about their financial situation and so on. So that's the only challenge we saw. Otherwise, I think the research team has to be also trained well to ask the right questions in the right way. But so far, we didn't have the big problems, but in some cases, little challenges. And it's very important to know the local languages, which in some countries is not one language. Yeah, there could be several. So I think, yeah, it's a very, very good thing to participate in. First of all, for your own sake, because you easily can have a plan of actions afterwards to improve things and processes. And it's a very good way of demonstrating that you do what you say you do to the external parties. Thank you.
Thank you so much. Okay, we're done with the questions. However, let me add one more question before we wrap up the webinar to Hugh, since you came to join from Baobab. It's a relatively new investment for us, and I'm very curious about Africa and Madagascar. I think you did not touch upon your client profile in your country. So I was very curious if you can touch upon, in comparison to, the JLG that Arya explained, the loans and deposits, which Shoira explained, the products are quite different. Client profile is also quite different. What does your client profile look like in Madagascar? If you can, explain maybe a client story that you're particularly fond of, any client that kind of remains an impression in your mind. I think that would be interesting for everyone to hear.
I think from what I've heard, the profile of the customers are quite similar. When I listen to what Arya was mentioning in India and Shoira was saying, most of our customers are micro entrepreneurs. They will mainly work on rural activities, on agriculture. Actually, they will develop the crops and sell to the market. Very micro activities develop to survive on a daily basis. This is really I think the majority of the customers that we are serving. This is the reason why we invest more on their education, so that we can help them grow the business. Since I joined Madagascar, I think I've met several customers, but we are running a program called Ampela, which means woman in Malagasy language, which consists of empowering and developing women. With 3 pillars, actually. The first pillar is training them, then connecting these women to all the women that have developed and managed their businesses before they have access to the business. When we started the pilot phase last year, we went to the west of Madagascar. We met a woman who've been developing crops. She She started by getting access to finance from her brother. She managed to gather to bring on board more than 200 older women to develop maize and sell it to one of the exporter in the local area. When I started discussing with that woman, I was struck by what she told me. She wanted to do it to prove herself that she was able to develop business, and the business development was not only a matter of men in the community she was living in. This courage, this force driving objective was, for me, as we speak now, one of the key messages that businesses is not only for some, it's about all of us. And also, if we want to create an impact in the community, we have all to participate.
Thank you so much. Yeah, I think it's really inspiring. And Shoira, I'm sure it kind of resonates with your own experience as well. It reminded me of some of the stories you spoke about in our interview. So yeah, for those of you who are interested in our client stories, please, read through the full report. We have many interesting client stories. So, and also a lot of very nice pictures, by the way. So please, enjoy the full report, and we look forward to any feedback you might have. Now, we're on time. Let me just quickly share my screen to have one quick announcement, which is actually we are going to start, it's not official yet, but an impact consulting service as Gojo, where we might be taking, consultations regarding impact strategy, impact measurement, impact frameworks. So all of the things that, we explained, mainly Arya explained today, we are happy to provide, support to develop for other companies who might be interested. So in case you're interested, please, contact Sheriel at Gojo. Or you can just go to info@gojo and we'll, pass it on to Sheriel, and we can start a discussion on this in case you're interested. Okay, so thank you so much for joining the webinar. I hope you all enjoyed this 1 hour. And when you close the webinar, you will actually be sent to this survey link. It'll be great if you can submit the survey so that we can keep improving and provide better webinars in future. So again, thank you so much for our great panelists today. Thank you, Shoira. Thank you, Hugues. Thank you, Arya, for attending. I think it was a wonderful session, and we hope to see you again soon. Thank you.
Thank you.
Thank you so much.
Thank you. Bye.
Bye-bye.
Thank you, Haruna.